Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to talk today for a short update with Alan Pangbourne, the CEO of Chesapeake Gold. Hey, good morning to Canada. How are you?
Good morning, Jochen. Well, afternoon for you, but good morning.
Yeah, that's right. Yeah, thanks for taking the time and also so spontaneous because you just released, I would say some fantastic news. Chesapeake completed the infill drilling campaign at Metallurgical, and we saw 22% average higher grades encountered within the intrusive hosted mineralization. So I'm pretty sure you want to comment on that.
Oh, for sure. I mean, we're happy, firstly, that we completed the entire program, and we completed it safely, which is always important for our employees. But what started off as a surprise about a year ago when we put the first 5 holes in, and we saw this increase in grade, and we went back and said, well, why? Got some more money and put a program together to do some more infill drilling around it to see if it's more pervasive than we originally saw in the first 5 holes. And so we're really excited the fact that it seems to be contiguous across most of the intrusive. So 22% is an amazing result. It really means a lot to the project because it's an increase in grade. It's not an increase in tons. So that means my dollars per ton, the value I can get out of the rock per ton I treat, has gone up without any increase in cost. The pit doesn't get any bigger.
Yep.
The amount of material I'm treating doesn't get any bigger. When I treat it, doesn't change. So it's a multiple plus through the project, and particularly given when we first started this, I was continually saying we believe there's a higher grade core. We believe there's a higher grade core. So the first 5 holes were a nice surprise. Yeah. Now with the remaining holes being finished, another 18 holes, we'll put all those together. But 22%, I don't know yet what the final answer is when I put it all in the block model and it gets smeared around and stuff. But it's all positive. You couldn't ask for a better result.
No, absolutely. And I mean, also the one hole you had here in your press release, like 357 meters at 1.43 grams gold equivalent. I mean, that's really a value, I would say.
Yeah, and it's not the only one. I mean, if you look through the table, there's quite a few of them that are 1+. And when you consider the original resource estimate that was in the PEA was 1 gram per ton equivalent, 166 or 67 million tons at 1 gram equivalent. We've now got a whole bunch of holes that are saying, well, no, it's not 1, it's 1.5, 1.2. Yeah. And so you add those into the average, it lifts the average of the whole thing, which is what the modeling will do when we get to that.
Yeah, exactly. And it was, of course, infill drilling. So the thing is, you have filled the gaps, and it looks like the gaps are even more valuable than the ones you drilled.
Yeah. Yeah.
What does this tell you for, let's say, for the whole ore body?
It's hard to tell because we've really focused. We started with a concept and we focused on that. That our belief, the key to getting Chesapeake to production is to start small, get it going, be in the game, and then expand multiple times. So we really haven't focused a lot on the rest of the ore body. There are some nice sedimentary intercepts in there, but they are around the intrusive. So we haven't done infill drilling on other parts where there's no mineralization of the sedimentary. And the simple reason for that is, we've only got so much money. We need to focus on what we want to do and maintain the focus on that rather than just willy-nilly drilling all over the place. We now know we've got a high-grade core. We need to do the next pieces to get to a PFS, which we're working on. And get that starter project because that's something we can do. Yeah. So that's really why we keep we keep coming back to intrusive pressure, because the economics are so much better. You know, it's mining 101, rule number 1, mine high grade. Rule number 2, if confused, go back to rule number 1. So we know where the high grade is. That's what we're going to focus on. That's what we're going to start with. And, you know, you've got to find a project that you can actually finance, build, operate, deliver. And once you do that, then you've got all the opportunity under the sun as far as expanding Metatis, looking for other opportunities, you know, building a real mining company. And so,
Absolutely.
you know, we're trying to maintain that almost belligerent focus on what the end game is.
Absolutely. Super. So, but for the short-term focus, we can say mine plan, maybe resource estimate, and also the PFS. Those are the things you want to do. What would be the time frame for all of that?
I'd say that you're missing one that is absolutely critical for the whole concept that we started with a year ago, and that's the met test work. So you know, we finished the drilling. We're pretty sure now that there is a higher grade core in the ore body. Yeah, and the 22% obviously helps. The next step, and the work is ongoing, as you know, we talked about it last time, is the met test work. That is,
so met is metallurgy for our viewers.
Metallurgical test work. So the column tests, you know, your viewers have seen some of the photos of the columns. They know they're off running in the labs, and we're working through getting a complete set of results before we come out into the market with them, because I want to be able to explain what it all means in one go, rather than putting 1 or 2 results and a lot of people go, well, that I'm not sure that, and having to try and explain it multiple times. So we did the drilling, got a surprise, done the infill drilling, nice surprise, holds up 22% plus or minus. The next step with that information is to redo the geologic model and then the block model. And that is one piece that then feeds into your mine plan and the PFS. In parallel to that, and it was the reason we did the first 5 holes, is to get material for the metallurgical test work program. And that's ongoing. But that is probably the most important building block that we need to be able to show to your audience and to the wider market that, yes, the technology works. Here's the results. And economically. That is critical. And economically.
Exactly. Yeah, as I always say, it does not help you when you have the best grades, but when you cannot get it out of the rock, it's not working.
And that was the problem. The problem with Metatis has never been metallurgical, despite what people say. Oh, it's refractory and you can't treat it. That's not true. You can treat it. You've always been able to treat it. Problem is, $3.5 billion capital for 95% recovery on what you thought was at best a 1 gram ore body doesn't work. Doesn't work. The economics
too much
don't
money.
work. The economics don't work. And it's hard for a company our size to finance a project like that. So, you know, we took a very different approach right at the beginning and went back to some basics and said, is there a way to get an economic, financeable, deliverable project for Chesapeake? You know, the big project doesn't go away. Yeah, if one of the majors wants to come and get it because they want to add 20 million ounces of gold and 500 million ounces of silver to their reserve statement, come talk to me. But just remember, we've got a plan. We know what we want to do, and I want to see it through. So you know, it's how could we get into the business? And a smaller project with a different technology. And given my background from the copper industry, I know you can oxidize sulfides in the right conditions. that isn't a question. We all know you can do it. I can point you to millions of examples around the world where sulfides are oxidizing naturally today. And they're a pain in the butt because it produces acid rock drainage, which none of the environmentalists like, nor should they, right? You know, I mean, go back in history, Rio Tinto in Spain, okay? Do you know what Rio Tinto means in English? Red River.
Yeah.
Right? And it's caused because of the iron sulfides that oxidize in those pyrite belts in southern Spain and contaminate the rivers. You go back in history, remember ochre? I don't know if you know what the word in German, but ochre was that sort of red, orange, yellow.
Ochre. That's ochre.
Yeah, that they used to paint their faces with. Well,
yeah.
You know where that comes from? That
from
is
the
the
iron
precipitate of the contamination from the pyrite that's oxidizing.
Crazy. Okay.
Right? So it's a natural process. It's been going on for millions of years. Right? What we're doing is we're tweaking the chemistry around it to make it do what we want it to do, where we want it to do. Right?
Yeah, super. So how long do you think will that MET testing last?
Oh,
and
look,
also maybe a question.
So break it into two pieces. The MET test work will go on for at least 18 more months, at least, because it's multiple pieces. You know, I need enough test work to support a PFS, right? But keep in the back of your mind, I want to build this. I don't want to start up and go, oops, right? So again, going back, given my background, I've done this before, right? All the way through from pre-feasibility study all the way through to start up.
You know how to do it.
There's a second level of test work that you should always do. Unfortunately, some people don't seem to want to spend the money on it. And there was a saying at one stage, if you can't afford a complete test program, you can't afford the project.
Okay.
Because you can't afford to get it wrong.
Yeah, makes sense. Yeah.
so you know that you break it into two pieces. The test work we're doing now is to support the assumptions that were the PEA at a pre-feasibility level. That usually means you've done it on representative average samples of the rock types or the mineralization types. And that's what we're doing. So with the columns we're running, the 16 odd columns that are going in the lab at the moment. And as each one finishes, we put another one on, but we've always got 16 running. They're being done on an average of those 5 first holes we drilled of the intrusive and the intrusive breccia. All right. So that will give me an average result. Great. For a PFS, that's fine, right? I know roughly where I am. Did we get the 70, 75% recoveries? Cool. Before I go to feasibility study and then into production, I actually need to understand the variability across that 170 million tons. Because I need to know what it looks like in year 1, year 2, year 3, year 4, year 5. At least the first 5 years in some decent definition. And the reason you do that is the early material you mine different to what you're going to see later on in the mine life, or vice versa? And how much does it vary? Does it go from 0 to 99? Right? But, I mean, I'm being ridiculous, but but does it go from 60 to 80? And if so,
or vice versa?
Or vice versa? Well, no, but you're still thinking of averages. I mean, year 1 is 68, year 2 is 72, year 3 is 78, year 4 is back down to 69, because of where you're mining and what you're mining and what the grades are. And it allows me to build what you call a geometallurgical model, not just a geological model. So then in each block, I've got all of the parameters that tell me the economics, because obviously 90% recovery of 0.3 is not worth as much as 75% recovery of 1. It mathematically can't be, right? So when you put the right recoveries in the blocks with the right grades, you often get a different economic answer. But you don't know that until you do the test work. And some people don't ever do the test work. They start up and they get surprises.
Definitely. No, I mean, if you do that really super properly, it helps the whole project and puts it on extreme solid feet, I would say.
Yeah.
Last question, what just came through my mind. Now we see 22% higher grades. Could that cause a problem with the metallurgy, or would you say, well, that's absolutely easy to handle?
Oh yeah, no, it's not. It shouldn't cause a problem. But again, I come back to why am I doing the variability test work next? Because as the grade gets higher, is the mineralization still the same? As it gets lower, is it still the same? So you do this range of tests to understand grade recovery relationships, grade time recovery relationships, because most refractory ore bodies, sulfide refractory ore bodies, as the grade goes up, the sulfur content goes up. So there may be a bit of a relationship between grade, sulfur, op costs, but generally it's not a big it's not a massive change. And so again, all of that comes out in that sort of second phase test work. But at the end of the day, 99%, when you increase the grade, nothing much else changes. Gold, it's not like copper when you increase the grade and you make more tonnage of concentrate, so you've got to ship more. So you've got all the operating costs with that. Yeah, in this case, you're not crushing any more tons. You're not mining any more tons. The pit may go a bit deeper because the grade will carry it, but it will be minor. So it really is 22% or whatever the average ends up becoming, straight to your bottom line. Right? Okay. So I get an extra 0.1, 0.2. So if you put it into context, gold's a bit over $50 a ton at the moment. Sorry, $50 a gram at the moment. Right? So my rock was worth $50 a ton. It's now worth 20% more. $60 a ton.
Yeah, that helps, of course.
Right? So it's $10 a ton. So it's somewhere between $5 and $10 a ton increase in value. Yeah. For nothing.
Okay. Yeah. Super. Perfect. So what are next steps?
Next steps, obviously.
Immediately. Drilling is done. So
drilling is done.
Yeah. Not more to report on that.
Yeah. I'm not planning on going back and doing much more drilling, if any. Yeah. Hopefully not any, because it gets very expensive. So drilling's done. Next is to put all of that information, rebuild the geologic model, then the block model, and that will then feed into mine plans and whatever. In parallel, keep going with the met test work.
Of course, as you said,
Get that first set of results out to the market and your readers, and explain what that all means. And then that together with the new block model feeds into a PFS. So met test work, we're hoping then certainly in the second half this year. I would like to get it out sort of September-ish, hopefully, because there's a major conference in Denver, as most people know. So I'd like to be able to put some results out.
That would be very nice, because I'm a shareholder too. I would love to see that.
Yeah. And a lot of the shareholders I talk to is when are the met test results coming out? So don't put any pressure on me, guys.
No.
Yeah, well, and you know, I mean, unfortunately, the one thing in this world you can't do anything about is time.
Yep.
Right? You can't speed up time. If it's going to take 180 days, it's going to take 180 days, guys.
It is, definitely.
Right? You know.
Okay, super.
So,
but you are on it, and you have enough money to do that.
We've still got over $30 million in the bank.
Super.
So we're good on the money front. That'll all lead together to a PFS when we get all of that done. In the meantime, a couple of other things we're doing around the edges: road, power, water, understanding exactly what we need to do, smaller type permits around road, power, water, which again, with the PFS will lead into the environmental impact statement to get approval. So
super. Perfect. Sounds like a very good game plan. So from a short update, we are at 21 minutes. I love it. It's also always interesting to talk to you, and I learned a lot today. That's fantastic. No, I would say keep it going, please. It looks all very, very favorite and very positive, I would say. And yeah, I'm looking forward then to your first met test results. Definitely.
Me too.
Super. Perfect. Alan, all the best.
Jochen.
Thank you very much. Talk to you soon.
Talk to you soon.
Yeah.
Bye.
Ladies and gentlemen, that was Alan Pangbourne, the CEO of Chesapeake Gold. You heard it. Still $30 million in the bank, working on high speed and real great results here from the infill drilling. Now the program is completed. You saw approximately 22%. The grades are higher. That will hopefully then translate, or it will translate definitely in much better economics. We will also, we are also already curious to see what will be the mine plan, resource estimate updates here on the economic data. And also, as you heard, they are going straight forward into the PFS, and also the met testing is running. But it takes all of it time, but they are doing it very seriously and in very deep and thoroughly. And that's exactly how we wanted to see. But because, as Alan said, completely right, if you cannot afford a really fantastic met testing, you might have a problem with your project in total. And that's what they don't want to have. And Alan has built several big mines in his former career. So I'm pretty sure he are doing, and the team, of course, is doing the right stuff. So check out the company. Thanks for watching us, and bye-bye from Switzerland.